Hello and good morning. I welcome you to the morning meeting today on Wednesday, the 18th of April 2018. This is Jens Klatt speaking, exclusively presenting this format to you for JFD Brokers as their global head of research and education. And we want to have a look at the markets and how things are developing. Currently, the DAX is giving back some of its gains here from yesterday. We made a potential squeeze up to and above 12,500 points and towards 12,600, probably if there's heavier short squeeze up to 12,800 points, a topic. So as it's so far, it seems somehow as if the momentum is now diminishing, let's say, here on the upside. Yesterday, already in the afternoon, as you can see here, the market really made the impression of seeing a squeeze that had something to do with the fact that the market really extended its gains on the upside and was pushing quite heavily on the upside and then not giving back these gains into the evening, but stabilizing at an elevated level. That's usually a sign that that was mainly short squeeze induced. And with the small expiration here on the Eurex on Friday, I think chances are quite good right now that the market has now squeezed out many of those market participants who bet on the market to trade below 12,500 points on Friday, the expiration at 11 a.m. GMT. And so with this in mind now, the question arises, okay, what does this mean for the DAX? I could imagine, in fact, and so I'm not really surprised to see the current drop here. I could really imagine that the DAX now will give back most of these gains again and at least trade back towards 12,500 points here. Even though what you can clearly see is that on the hourly chart, everything above 12,400 points should be considered bullish. So this is the last relative low here, which is holding this sequence of higher highs and higher lows in play. Nevertheless, I could imagine that at least there will be a retest of this region around 12,500 points, and that probably the DAX can't really hold these gains from Friday. Let's just see what the next hours of trading bring. So far, from an intraday trading perspective, the drop back below the 50 exponential moving average here on a 5-minute time frame is the first sign that probably now the advantage switches from the long to the downside here. And let's just see what happens and how the DAX presents itself, even though the current drop also here below this low of this consolidation area below 12,570, 580 points is also a first sign that this structure of higher highs and higher lows, which was implemented yesterday here, that is now at least interrupted, if not broken. And this is also favoring more losses than to come, even though that sounds quite brutal. I don't think that this will be a huge sell-off. It's just that the DAX probably will give back some of these gains here with the drift lower then. Yeah, so that's the picture on the DAX. Question, okay, well, how to trade this? Probably retest around 590 here. Could be seen as a potential short trigger, aiming for 12,500 points on the downside, with a stop here above 12,640 points. Risk reward is close to 1 to 2. Probably this is justified here. If you're looking for such an intercyclical engagement, some probably will say, I wait for the corrective move to be finished here and give it another try. Here against 12,480 to 12,520 points here, this region of these highs. Consider this as a potential long trigger and see another attempt to attack the region around 12,640, 650 here then before the small expiration on Friday. So there's also something really interesting developing right now in GBP/USD. While we first of all have a click here on EUR/USD, you can see that the picture is not really spectacular. This is completely different in pound sterling. As you can see here, there's a huge drop on the downside from over 143. So yesterday we didn't make it against this level. We didn't make it higher from here. But the market really stabilized against this level and has now seen another quite aggressive leg lower today due to the fact that the inflation data, which was published here at 8:30 a.m. GMT, came in below expectation. and is right now reducing chances of a rate hike of the Bank of England here at their next meeting and before June then, respectively at their June meeting, let's say. Therefore, I'd like to present to you a chart which is here, which can be found here. That's a chart from Jens Klatt. I found it yesterday on Twitter. I retweeted it and I want to share it with you because it's very well illustrating what the picture looks like and where this quite aggressive reaction in pound sterling currently against the US dollar comes from. So you can see here in blue the probability of a 25 basis point rate hike by mid 2018 from the Fed, and in green you can see here the Bank of England, in fact, and those two this is a head-to-head race, let's say. It's like market participants at the swap markets obviously expect the Fed to hike rates again. Okay, this is no big surprise. Therefore, let's have a look here at the Fed Watch tool at the Chicago Mercantile Exchange. You can see the probability of a rate hike at the 13th of June 2018 here. It's nearly 99%, and the current target rate here is 150 to 175. Here is 175 to 200. So obviously market participants are very sure that there will be another rate hike. So this is in fact a little surprising when looking at the when looking here at the swap markets, because here you can see that the probability is around 90%. Even that's quite high, but nevertheless it's not as high as on the Chicago Mercantile Exchange. But more interesting is in fact the green line with the Bank of England here. The Bank of England is expected to hike rates by 25 basis points here from a probability perspective at the same level as the Fed is expected. And now inflation comes in below expectation. In fact, here you can see on Trading Economics, United Kingdom inflation rate, that's a yearly low. And this is, you can see it here, read it here. UK inflation rate eases to a year low in March. This drop gives the Bank of England some room to breathe, let's say, and not to be too aggressive in terms of rate hikes here. Probably give the credit markets more room to breathe here. And considering this, the current drop in the GBP is mainly due to the fact that currently the probability here is dropping, that the Bank of England probably does not hike rates within the next 2 months then. And this said, I think it's probably not the worst idea to step back from potential long engagements here. So some might say, well, that's great, it's a regressive move. And let's say we are going down to 140, 41.30, 41.50 here. That's a potential region for long engagements. This is great. So why not consider long engagements against this level? Well, because the data which came out now is indicating that probably it will be difficult to find bids here for pound sterling against the US dollar. And on top of that, there's also something else which is very interesting to note. And therefore, let's have a look here. It's also a chart from Klatt, which is showing the speculative positioning here in the future market and the US dollar index future. And the commitment of traders report here, which was published last Friday already, is indicating that currently, as you can see here, we have kind of a so-called sentiment extreme, which is forming. So the market is heavily net short the US dollar. That has mainly to do with the fact that market participants are very, very skeptical, mainly due to the comments from Donald Trump here in terms of the manipulation of currencies from the Chinese or also the Russian ruble here, which he said was manipulated. The interesting thing is, if you now look here at this picture, you can see that from 2017 onwards, the US dollar is on a clear downward move. I mean, this is the US dollar index future, so we're not talking about the Chinese yuan renminbi here, but we're talking mainly against the euro. We're talking about pound sterling. We're talking about Swiss franc. We're talking about Canadian dollar and all this. But, and this is the thing, so obviously the US dollar is already in a downward spiral here. And probably, and this is something which the market is anticipating here, there is far more pressure to be expected on the greenback from those comments here from Donald Trump. This is something which is clearly indicated by his tweets here. And the sentiment is a potential extreme, which means that rather sooner or later there could be a more aggressive pullback in the US dollar, which could then result in some demand coming into the market for the US dollar, which is then pushing pound sterling lower. So we don't know when, respectively, if something like that will happen, but it's definitely an option, which means that especially when the Bank of England does not come out with a rate hike as expected from the market, then that such a sentiment extreme, which could drive US dollar higher, at least short term, that this could also result in a quite aggressive push back towards and below 140 here, and that this was only a small stint, kind of stop fishing move here in pound sterling to new yearly highs, which we saw yesterday, and that this is probably not the best idea to right now consider long engagement in pound sterling then, against the US dollar at least. While we're talking about the sentiment extreme here in the dollar, we also should have a look here at dollar Japanese yen. I think things are getting really interesting now when looking at such a sentiment extreme here, when considering the region around 107.50 to 108. Since this region is a region which could be which could act as kind of a trigger, and once we break above 108, there could be further demand coming into the US dollar, which drives dollar Japanese yen then higher up to 110. So we are probably about to see a bullish break here, which is in fact completely different from what I expected before. When looking at dollar Japanese yen, I was all the time, and I'm still, by the way, a little skeptical as long as we trade below 108. Nevertheless, my picture here would definitely look different once we break back above that level, because the thing now is that, or my expectation is more like dollar Japanese yen to attack 105 again and probably push below that level, but therefore we definitely need some kind of risk aversion hitting the market. So far it doesn't look like that, and with such a sentiment extreme forming in the US dollar index future here and potential short covering happening, that could then mean nothing more than that dollar Japanese yen will push here back above 108 in this case. By the way, now let's have a final look here at the Euro USD. That's also quite interesting, I think, because we can see that we are in a very neutral and choppy market environment. But if you zoom out of the chart, step back a little, you can see a structure of higher highs and higher lows. And I think there are many traders out there who would, on a daily chart here, consider this to be a bullish consolidation. Now the thing is, with the sentiment extreme forming and knowing that in the US dollar index future 60% of the basket is euro based, that means nothing more than if the sentiment extreme really is unwind, where we get to see such an unwind here of this short position US dollar index. That means nothing more that the breakout here is not to be likely to happen on the upside, but instead on the downside. So it could be that Euro USD is about to see a more aggressive corrective move here, and that we should prepare for a break lower if the sentiment extreme is unwind. This is now something we have to consider here. If this does not happen, or similar to what happened already here in the past. Remember that time there was a corrective move. Yes, that was in 2017 somewhere. Let me just see here in the US dollar index future. So that was here. That was in September. Nevertheless, you can see that the structure of falling highs and falling lows was only shortly interrupted, only to see further lows here again. That was mainly driven, by the way, by the comments from Steven Mnuchin here in Davos. Some of you might remember that. Nevertheless, now when looking at this picture, you can clearly see that a breakout of this channel, of this downward channel, is likely, is something which should be taken into account, move back above 91, and probably we can extend those gains a little, even though also something we should consider from a technical perspective, everything below 95 here should be considered bearish. So in fact, this is the last relative low, high. This is the last relative high. This is only a swing high, meaning from a pure technical standpoint, we need to make it back above 95 to brighten things up from a technical perspective here. So this is also something which is not happening so far, but nevertheless, remember, a break out of this channel here could trigger bullish action in US dollar on a broad scale against the euro, in this case driving Euro USD lower. accelerating a down move in GBP USD, for example, breakout above 108 in dollar Japanese yen. Yeah, and this is definitely something worth watching here. And that's it from my end. I wish you all the best. Happy trading. What's your stops? And take care. Talk to you tomorrow, 9:30 a.m. GMT with the morning meeting. I definitely look forward to it. Wish you all the best. Happy trading. See you. And bye-bye.